Hello, ladies and gentlemen. Welcome back to the newest edition of Levelytics on Video. I am your host, Jordan. And for those of you who don't know me by Jordan, I also go by Permable Nino on Twitter. It is great to be back for another week talking crypto markets with you guys. The past 4 to 6 weeks have been a gigantic buildup to discussing the bull case of what's been going on under the hood in crypto markets. And I think in this edition, I'm going to talk to you guys about why the Levelytics book is now 100% long, and we have deployed all of our cash over the past couple of days as Bitcoin starts to tease the $80,000 level, right? So we have a few charts to go through here, but also as I go through this article and you think there are unanswered questions and you're trying to wonder how I built up to ultimately to make this decision to push the book, all the chips in on the table and make a go for it and get long crypto. Keep in mind, like I said, the past 4 to 6 weeks, this has been the topic of discussion, getting ready to go to battle. Be patient and wait for the trading system for Levelytics to execute and fire the signal to get long and deploy more into the crypto markets. Okay, without further ado, let's get into it. So here we're looking at the BTC USD daily chart, right? And we have all the levels marked out for you guys, right? So anything below 65,000 is deep value, 65,000 to 60,000 is value, and then anything below 60,000 we consider deep value, right? These are levels that we hit at the beginning of February when the price capitulated. And I think there were some people thinking, oh, we might go to like 55,000, right? At that point in time, there was plenty of reason to believe or not be surprised if we wicked deep down to that level. And that's a level that we should continue to monitor if the price gets convincingly turned around at the $80,000 level. However, that is not the topic of discussion today. Today, the bulls are knocking on the bears' doorstep, right? We are in the bears' first wall zone, right? Between 76,000 and 80,000. And as you can see, this is a resistance zone. This is the key resistance zone, in my opinion. I've been saying it for weeks that I think this bear's first wall is going to be the one to break. That the bear's second wall will not be nearly as exciting. It'll provide some resistance, in my opinion, but I think the real breakout and the big violent move that will happen for Bitcoin and crypto markets at large will be on the break of this first bear wall and getting above 80,000. And lo and behold, the Levelytics trading system it has started to print blue candles, right? And I've told you this before, buy blue, sell red, right? So anytime daily candles are red for BTC, that means the momentum is bearish and to the downside, and there's no reason to own Bitcoin. And to tell you the truth, usually when there's no reason to own Bitcoin, there's not many reasons to own altcoins in general as well. So we've gotten this big break, right? We finally got the blue. However, we're still sitting within this resistance zone. So this is a problem that I discussed in the newsletter, is that when you have a momentum trading system, especially in bear trends or mean reverting markets, you can run into market conditions where you buy the top, and it can happen multiple times. Fortunately for this trading system, though, which gives me more confidence that this is a higher quality signal this go round, is that this signal has been bearish since October 2025. That's 6 to 7 months without firing a single blue candle for this trading system, right? And it flipped red right after the October 10th liquidation event, so right around the 100,000 level. And I'll zoom out to show you guys that level, but the problem is that I really like the zoom that I have on the screen here, so I just don't want to escape it until I'm completely done with this look. But yeah, so this is the first blue. These are the first blue daily candle prints for BTC USD in the past 6 to 7 months. So that's a very long time. And going to continue to beat this dead horse. I think there's a chart within this video that I'm going to talk about that's related to it, is that anytime you have long breaks in persistent trends, whether they're bullish or bearish, and the reversals to either direction, that is something to pay attention to. That usually means that there is something going on under the hood, and you definitely need to be paying attention, right? And so if we get the first bullish momentum print using the Levelytics trading system in 6 to 7 months, there's something going on. There's reason to pay attention. And, keep in mind, that's just a technical reason, from a pure price action perspective to have the inclination, why I have the inclination to want to take action. As always, this is not trading advice. You do whatever you want. This is just me talking my own way, reasoning through markets with you guys. So you guys can either disagree, which you can leave that in the comments, or you can agree with me, leave it in the comments, and give me more feedback on what other considerations I should take into account. But yeah, so this is a bullish, rare signal. When you have been bearish for as long as we have, which now I'm going to finally zoom out for you guys, right? It flipped bearish on October 10th, and the daily close price was where's the C on here? $112,980. It's been bearish since then, and it's now flipping bullish right at $79,000, $80,000, right? So this is a reason to get bullish. The fact that this price has not, we haven't had any bullish momentum signals on the daily chart for a very long time. So that's something to keep in mind, something to take into consideration as we start to look through our various other metrics that we have in the article today. So let's move on to the next chart, shall we? Okay, so this chart shows the 30-day annualized volatility for the meme coin index. I shared this chart on Twitter in the past week, and it was just one that I couldn't ignore. And I figured this is a great contextual chart to provide for the article and the video today. And the reality is, I've talked about this before. Crypto is a volatile asset class, right? And memes are possibly the most volatile sector within the most volatile asset class, right? So what it tells you is when memes and the volatility related to memes dies off, that tells you the crypto space is super dead, right? And we've talked about this as well in previous articles, that when volatility dies in crypto, price action is to the downside. Crypto markets do not like low volatility environments. When basically what it means is that crypto is a gambler's paradise, right? It's a big gambling space that rides heavily on emotion. So when it tells you that there's no volatility in the building, it tells you all the gamblers have either gone broke, exited the space, or people are super depressed and they don't even have interest in trading the asset class at this point. And this this annualized volatility measure for memes on multiple occasions has marked periods right before big expansion moves. And I'm about to show you a few examples here. So I'm hovering over October 2023. This is the annualized 30-day annualized volatility was below 100, right, at this period in time. And that's the level you want to pay attention to for this meme coin index. And this chart's also on the Dude Terminal website as well, if you guys want to look at it yourselves. October 2023, right before the Bitcoin ETF got approved, right? Market rips right afterwards. Huge expansion in volatility, right? So that's the first move, right? So then down here, September 2024, November 2024. Guess what happened right after that? The presidential election, boom, rip in volatility. And then September 2025, October 2025, right? We're below 100, hanging out around 100. Rip upwards. Guess what happened? The gigantic crypto deleveraging event, which began the beginning of this disgusting bear trend, right? So every time we get below this 100 level, there tends to be some sort of expansion move that causes a spike in volatility for crypto at large. Because, generally if meme coins if it's happening to meme coins, which are the ultimate beta assets in crypto, it's happening to the entire space, right? When we've talked about this, the entire space moves in one direction. That's how you can get these situations where like you get 90% plus coins have not made new highs over the past 90 days. That's a metric that we've gone through in a previous video before. So now you can see where we're at now. We're at 100%, right, from the meme index. And we've been way below that. We went all the way down to 75% annualized volatility over a 30-day basis for memes in April 2026, right, which was just a month ago, right? So every time we get these moves, and this is really depressed, right? I mean, this is back to October levels, October 2023 levels, or September 2023. So volatility has just completely exited the building. People are disgustingly bearish crypto. And here's another thing to show you that over time that this bull market has like slowly died off, especially within the meme coin sector, right? Is that you can just see it downtrending, right? It peaks in March 2024 and it's just slowly downtrending, just bleeding out for the next 2 years until now. And, these depressed levels are, you're picking up volatility off the floor here, basically. It is a good opportunity to get long crypto when it's not viewed as a popular play. And I like that combination when you mix it with Bitcoin for the Levellytics momentum indicator to showing that it's time to get long, right? That's a good combination. You want those two things going hand in hand, and that's something to get excited about. So that's another reason why I think this 80K level is very significant. I think that if 80K breaks, it's not going to be like a couple $1,000 move over a couple weeks. It's going to be a $10,000 to $20,000 move over a week and a half would be my guess, maybe 2 weeks. And, obviously that's just me ballparking it. There's no like actual like hardcore math going behind that. It's just simply the fact that I think this market is charged up and it really, really has the juice to make an expansion move and a move that catches a lot of people off guard. And like we talked about in the previous video, one of those moves where it will make your year in crypto. And if you missed it, you probably missed out on a very good opportunity to make very quick money. That's not a reason to FOMO into anything. Like I said, and if you go through the past videos and articles, this has been a very slow build up to this moment where I'm kind of getting like max bullish. And obviously that's reflected by the fact that the Levellytics portfolio is 100% long. But yeah, this is exciting. You want to see this when Bitcoin's making, new highs and printing first bullish print in 6 to 7 months, and you have volatility on the floor for hyper volatile assets like meme coins. This is exciting. This is good to see. So this is the first piece of evidence that we used in today's article. Okay, so now this chart shows the percentage of perp pairs on Bybit that are making new 90-day highs, right? So like I said, this space moves all together all at once, right? These peak out at like 80 something percent, right? So this means whenever you get these peaks at around 80%, this means that 80% of assets or 80% of perp pairs on Bybit have made new 90-day highs, right? Over the past 90 days. So as you notice, though, they don't happen that often. The majority of the time that this asset class is just like, this is pretty flatlined. It has a very flat structure for the most part, right? So whenever it actually starts moving to the upside, you are thinking, oh, this is a decent opportunity to time a breakout for the entire space, right? That is something to pay attention to. And that's exactly what we have going on right now. And it began in mid to end of April. And right now we have 16% of assets that have printed new 90-day highs. Right. And that's telling you that this 80K level is the area where a lot of these altcoins are starting to break to new highs and price action is starting to become a bit constructive again, instead of just this constant sideways or downwards bleed out for altcoins, right? This is flat. And you see how flatline this got after November, basically beginning in December. This has just been completely flatline. The market has been dead as prices just bled downwards, not only Bitcoin price, but altcoin prices. And obviously if price is going down, no assets are making new highs, right? Because the whole asset class moves together in one direction. So in terms of timing, this is one of those things that I'm going to just beat this dead horse again for this metric. It's always difficult to time things. It's difficult to know when the market's getting excited and is being responsive to price action. And when assets are starting to expand to the upside or the downside, right? Especially when you see a lot of chop, and there's been a lot of chop in this market as well. The market's responding. The fact that this metric is ticking upwards just tells you that this level between 76,000 to 80,000 is where people care, where altcoins are starting to get pushed a bit harder, and that's time to pay attention. We've been in time to pay attention mode for a little bit now. Now it's time to think, okay, this is the level. So if Bitcoin breaks 80K, there's going to be a big explosive move, and that's how you probably get to these high 80% levels. Keep in mind, this 80% level happened in December 7th, 2024. So it has been a hot minute. So it'll feel like rare air if that happens. So that's how I'm feeling about this, and this is how I'm thinking about timing in terms of the market and what could possibly happen over the next couple weeks for crypto. Okay, on to the next chart. So this chart shows the consecutive days in a row that the average 90-day return for altcoins have been positive or negative, right? So positive values are for positive returns and negative values are for negative returns, right? So for example, over this period, this peaked at May 2024 at 212. This was 212 days in a row of positive 90-day returns for altcoins, right? That's a long duration trend. And when it broke, you had months of sideways. After May, it went sideways until November. That was 6 months of sideways. That's a lot of chop and pain, and especially for altcoins. During this period, altcoins did not perform well at all, right? And that's one thing that we keep talking about, right? When long-term trends or long-duration trends break, there's a lot of pain on the other side of that, and you need to be prepared for that, right? Because there's a lot of stored energy. It's like imagine somebody that's like in a who's been bullied for a long time, right? And they finally get big, buff, and strong, and they finally swing back on their bully, right? The damage that they probably want to inflict on that person is a large magnitude of damage, right? And that's exactly what happens when a bull trend reverses in this case, right, in May 2024. And that is exactly what could possibly happen now that this trend is reversed. So as of a couple days ago, we had hit let's see, a little over 200 days in a row of negative 90-day returns for altcoins. That's a long time, 200 days. That's over half a year. And we finally broke that bear trend. It broke as we've been in the 76K to 80K range. So there's always violence on the other side of that, right? And it also happens to go hand in hand with the Levellytics momentum indicator flipping bullish, and it's also going hand in hand with volatility on the floor for the most volatile assets in crypto, meme coins, right? So we're starting to stack up the pieces, starting to build the bull case and giving reasons for why this move could happen soon and why it could be explosive, and why the expectation on my end is that it will be explosive. And it was, I think it almost goes without saying that the reversal of this bear trend at some point would have an explosive move, because what happens in crypto is that price goes down forever. People get insanely bearish, get so comfortable with the fact that things are bearish, and with good reason, right? Because a lot of altcoins do nothing but go down for the most part. They have these very rare periods where the price pumps, and then otherwise they just constantly bleed out. It's a perpetual bleed out. So bears get in front of their skis a little bit, and then eventually they're going to get steamrolled. It doesn't happen very often. It happened in January 2023. At this bottom after the FTX collapse, this move was explosive. For those of you that were around for it, anytime you're around for a bear market bottom, it's always an explosive move. Hold on, we can even go back even further. Let's zoom out here. This is the BTC USD chart I was showing you before. Hold on one second. Let's go back to 2019 BTC, right? This is BTC in 2019. In March 2019, before it broke out, this move was explosive, right? When prices just down only for years at a time, and you get a long period of sideways, which is exactly what we've had now, you get these gigantic breakouts, right? So end of March 2019, BTC had gone sideways for a hot minute and then it just ripped upwards, right? And I think we're getting into that position just right now, and we're starting to, like I said, we're stacking the evidence that that bears might be getting in front of their skis a little bit. They might be overextended to the bearishness downside, right? And we just broke this. This is another good indicator that this trend might have already done its nastiest work on us. And to tell you the truth, if the BTC price was at 125K and it went all the way down to 60K, it doesn't take a genius to figure out that a lot of damage has been done, and that if you're starting to get bearish now, you're pretty late to the party, right? But the fact, it's one thing to be late to the party, and it's one thing to understand that the party might actually just be really close to over. And I think that's where we're at. The fact that 90-day altcoin returns on average have flipped positive, altcoins are a hated asset class, right? So the fact that that happens means usually people have just gotten sick of selling. They think the risk reward is crappy, even despite how speculative altcoins can be, right? Even if they have no revenues or anything like meme coins. So yeah, that's something to keep in mind, something to get excited about, and something that I'm paying attention to. Okay, so this chart shows the ratio between locked risk assets versus unlocked stablecoins. And what does this exactly mean? I've shared this chart before. I can't remember if I've talked about it in a video. Locked risk assets mean assets like Ethereum or Arrow or Athena or anything like that. Anything that's not a US dollar, anything that's not a stable coin, right? So locked risk assets means any of those type of assets that is locked inside of a DeFi protocol, right? That means you're taking on the most risk possible. You're holding a risk asset and you're putting it in a smart contract in crypto, right? So that's outside of getting very long, levered long in a perpetual perps position, it's as risky as you can get with your spot assets to some extent, right? So it's that ratio versus unlocked stablecoins, which unlocked stablecoins are just stablecoins that are not sitting within a DeFi protocol, right? And whenever this value gets overheated to the upside, that means that people are overly bullish, right? That means there is a shortage of cash and that everyone is kind of fully deployed to some extent on a relative basis, right? Because the value of risk assets as a market cap, locked risk assets versus stable coins is very high, right? That means there's not a lot of cash available to buy. And whenever the ratio is low, that tells you that there's a lot of cash available within the crypto ecosystem, right? That means there's a lot of loose cash sitting in people's pockets that is not deployed into a DeFi protocol. This means this money is just sitting idly, right? It's ready to get put to work. You can do whatever you want with it. You just buy spot. You can lock more into DeFi. You can do whatever. You can take on more risk because, you're comfortable. You're not in a risky position. You're not caught on your heels. You're just sitting in straight cash, homie. But yeah, so let's just show you a couple. I'm going to show you the periods where this value gets really deep negative and what happens afterwards, right? So this is August 25th, 2023. August 25th, 2023, right? This is right before the Bitcoin ETF got approved, right? This was a good buying opportunity. Price pumped and dumped, boom. Price rips afterwards, right? And you can see the values got pretty high, but they stayed sustainably high for a long time. This is one of those bull trends. I've said this multiple times, that this bull run from October 2023 to March 2024, this was the meat of the bull run. This was it. This was actually one of those periods you look back on, you're like, wow, it was easy mode back then. You get, as long as you didn't get liquidated and too excited trading perps, you were good to go. You just held spot and things ripped for 6 months. So this was a great bull run period. But after that, price got a lot more responsive, right? So let's look back at this. Okay, so September 8th, 2024. September 8th, bottom, pure bottom, right before the presidential election. This was a moment where the space was relatively cash rich. People were risk off. And price put in a bottom, and it basically went up only from here into a month after the U.S. presidential election. And guess what? December 7th is when the next time this metric topped. December 7th. Boom. Like right around here. Right when BTC topped right after the election. So you just see it over and over again. So March 12th, 2025 and April 9th, 2025. March 11th, April 9th, right? Both of the bottoms here. So this metric has a good accuracy historically for, at a minimum, nailing bounces. It doesn't always give you a pure, clean, beautiful bottom, and the market just goes up only from there, right? But in many instances, it actually just kind of depends on your market conditions, right? If you're in a bullish if you're in bullish market conditions like you were August 2023 and September 2024, the market just goes up only from there when you get it, right? But in this situation, March 2025 and April 2025, you got two bounces and it went up. It takes a couple bounces to get it done. And that's exactly what happens in the bear trend here. November 22nd, 2025. It's like right around here, bottom, right? Price bounces and it goes sideways for 1 or 2 months, right? Then price rugs one more time and it bottoms again and hits the green line February 6th. Boom, bottom here. So, this metric has a lot of history of good accuracy. And, the top also, August 2025. This is the Pico top pretty much, outside of this fake out in October 2025. So what's going on now? You've hit it twice, right? Cash rich once, cash rich twice, and now we're sitting at very low values. And note that this value downticked recently because of some of the DeFi hacks that went on, right? The TVL of DeFi went down, I think 10 to 15% or something like that after all these recent hacks that happened with Layer 0 and Aave and whatnot. And if this goes down, if this metric goes down after those events, it tells you that the TVL of DeFi went down more on a relative basis than stable coins that got pulled out of the space, right? So if people were getting uber bearish, people would have started pulling stable coins out of the space or redeeming stable coins, and the stable coin supply would have gone down. And that would have been a very bad sign, right? So if this metric had for some reason ticked upwards after that had occurred, that would tell you that people are really exiting the space. But this downtick tells you that actually people just risked off. It was a risk off event. It's not the end of DeFi. This has happened a billion times. I know that people are saying that there's been more hacks. It's been a more common occurrence, which might be a result of the boom of AI and hackers becoming more savvy and more ways to build out tooling to defraud these different protocols. Maybe that's true. But if you're just a trader and looking at the data and you're trying to understand the risk in the crypto markets and understand the events that took place related to these hacks, it was just a risk off event. And it happened to occur, April 22nd? Yeah, it's like his price is just ticking higher. We're like printing new range highs as that's going on. It's like a bullish divergence. People always say when the market stops responding to bad news, that is a bullish signal, right? And that's what's been going on here. And like I said before, money left DeFi, right? But it didn't leave the space in as big of a way, right? Because otherwise stable coins would have been redeemed in a very big way, and that's not the case. So that's something to keep in mind. The space is super cash rich. We've had multiple periods where cash richness has overextended to the downside in this bear trend. So that's just another way to tell you that the market is charged up. There's enough money sloshing around right now, where if price moves, people will probably start deploying and using that cash, right? And either they buy spot assets or they buy spot assets and put it into DeFi, whatever they want to do with it. But the space is cash rich. Anytime you're below this black line, you're cash rich at that point. Obviously, once you break it going to the downside, though, that's a bear trend, right? So you need to keep in mind, we've been below this since the beginning of November, right? Since the beginning of November, we've been in cash rich territory. So it's been going on for a hot minute, and that's a reason to have a bullish stance that people have just been accumulating cash for a long period of time as spot assets bleed out. So it's reason to get excited, and that's just gas in the tank, right? That's how you push the prices harder and higher for longer if that occurs. Okay, so this chart, I've used this chart a lot in recent weeks, but if for those of you who are new to the channel, have not seen any of my videos or read my articles, this chart shows the percentage of the past 30 days that funding rates have been negative for altcoins and BTC. The orange line is for altcoins, and the green line is for BTC, right? And high value signal to you that there's been a lot of shorting going on in the market, and low value signal to you that there's been a lot of longing going on in the market. And there are periods in time, which I talked about this in the article, where you can have bearish collisions, right? And what do I mean by bearish collision? That means that the amount of time that altcoins have been had positive funding, right, with a lot of longing going on, collides with the Bitcoin line. That means that there's just been a lot of longing across the board, almost to the point where altcoins are long more than BTC, which that should never really be the case. And why? Because altcoins underperform. They don't have as bullish of a narrative and reason for existence as BTC does, right? So that sounds very Bitcoin maxi of me, but it's just kind of the truth, and it also just shows up in the price chart. You chart anything against BTC, it's all down only, basically. But yeah, so we had a bearish collision here, for example, in August 2025. You can see that the prices went up from, I don't know, July 10th, right? So price pumps, people start longing the crap out of altcoins for what, a month straight, and you got a bearish collision here a month later. And that pretty much marked the BTC top. And right before the October 10th clean out, where every leverage trader and their mother basically just got taken to the morgue, you had altcoin percentage of the past 30 days go below the BTC line. Mega bearish. That means people are way too long going into these highs. That's not exactly what you want to see. You want to see that people are not that long, people are out of position, and that the market isn't overly juiced sitting in perpetual swaps positions, right? And so since then, right, we've had this bleed out. Altcoins have just been consistently shorted ever since November, basically, right? This is 90% of the time since November, altcoins have been basically shorted. And we've talked about this before, that funding rates and altcoins go hand in hand. You want signs of people willing to risk on in the market. In different ways you can view that is altcoins are performing well. That's a sign of people willing to risk on. Or you can look at funding rates, where if people are willing to pay more to be long perpetual swaps or altcoin perpetual swaps, that's a healthy sign that people are willing to risk on in the right market conditions. So this is exactly what we've had in this move over the past month, since April 9th, right? I don't know, like April 9th, April 5th, like basically a month ago, right? Because it's about to be Cinco de Mayo tomorrow for those who celebrate. Price has been up only from 70K up to 80K, right? It's been a good, healthy move. In the meantime, you've seen that this altcoin line is going down, which signals to us that people are getting more and more long altcoins, right? And in the meantime, you have this bullish divergence because more people are getting more and more short BTC, right? And I think that some of that has to do with the fact that there's a persistent spot bid for Bitcoin, whether it's Michael Saylor or whoever's tailing him, there is a bid in the market, right? And that is causing funding rates to go negative. So you have this bullish combination going on where people are willing to risk on in altcoins, which is exactly what you want to see in a crypto market, right? Because if people are willing to risk on, crypto is a risky asset class. You want to see people being willing to risk on, right? There are periods when it becomes overextended and it's been going on for too long, but that is not the case. We have been in a down only trend for 6 to 7 months at this point, right? So you're getting signs where people are more consistently willing to stay short BTC with a persistent spot bid going on in the market, and people levering up on alts, showing that they're willing to take on more risk and get long alts. So we're getting this possible bullish collision down here that's about to take place in probably the next week or so. where there's just going to be a blowout, right? There's going to be something that goes on and something has to give. And yeah, it's just basically like, it's like the people doing those Oklahoma drills in football where they just run into each other at full speed, right? That's exactly what we're teeing up for here. There's a lot going on here and a lot of reasons to be excited. And like I said, I think this is a very exciting time to trade crypto if you like to trade crypto. And yeah, so that's why I said the Levelytics book is 100% long, and I'm going to show you the portfolio right now. So this is the book, right? This is the book. So 61% long BTC, 12.6% long Zcash, 7% long ETH, and the remaining bit is just sitting in meme coins, popular DeFi, AI, and Hype is just Hype. Hype is just going to do its thing. And yeah, so this is the book, and I think this is I think this is a healthy portfolio construction. What really ended up happening over the past few days is, this BTC momentum strategy flipped bullish, and I just deployed the rest of the cash in the portfolio into BTC. So it kind of, the rest of this positioning was kind of already taken care of, right? And Zcash is starting to take up a larger percentage of the portfolio just because it's outperforming the rest of the market. It's kind of going up only, and I can show you that chart really quick. Let's go back to it. There's a reason to be excited about Zcash here. Right? Blue. So printing blue candles on April 30th. And for those of you who, people have been asking me like, oh, where can I get access to this metric? This momentum trader indicator is on Dude Terminal. I can show you on the Dude Terminal website here. You go crypto charts, indices momentum trading, privacy momentum trading. Give it a second to load. Zcash bullish, right? So go to the Zcash chart. Press this open button to open in a separate tab. And let's show you this. See? Same exact thing, right? So you get a feel for what's going on here. And yeah, so it's available to you. So if you ever wonder, oh, I want to know what he's using to trade this, blah, 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 it's just right there. The only difference between the trading view indicator and the one that's on Dude Terminal is I have a few extra gadgets that I built into this one that I'm not 100% sure that I want to share with the public quite yet. That's not even me guaranteeing I'll ever share it. But this one on the Dude Terminal website gives you plenty to chew on and work with. So there's no reason for you to not to be paying attention to this. And this updates every 8 hours. So it'll on average hit every daily close, pretty soon afterwards. So yeah, that's that. And yeah, so the Zcash is a pretty healthy percentage of the book, and it's crushing it. I've talked to you guys about this before. I had that article that I wrote about privacy coins, explaining how assets like Zcash or these other privacy coins, they have outperformed the market over the past 6 to 9 months. And that's the first time in their almost 10 plus year history that's ever happened. And like we keep saying on this channel, anytime a long-term trend breaks, the violence on the other side is of large magnitude. And that's exactly what we see going on with Zcash. And that's exactly why the Levelytics book has more Zcash exposure than it has ETH exposure. I never thought I'd even say that, but that's what happens when a huge trend reverses. So this looks good. Let's look at the Zcash BTC chart. Also blue, also outperforming Bitcoin. So there are reasons to be excited about Zcash. I've been a historical hater of it, but yeah, this is a good thing to pay attention to. So yeah, that's the portfolio allocation. And then here is the Levelytics returns, right? So we're down 28% since inception, and BTC's down 32% since inception. Altcoins are down 60% since inception, and the amount of money, the return that needs to be made to get the Levelytics book back to break even is 39%. It's starting to tick downwards a little bit as the market goes up, and we're still outperforming BTC. And the main thing to pay attention to here is that now that the book is 100% long, right? We're likely, if BTC breaks out, BTC will not begin outperforming us most likely, unless altcoins just drastically underperform. That other 40% of the portfolio just drags really hard. I don't think that's likely, but you never know. And you can always change the positioning afterwards if that's what occurs. But yeah, I feel decent about this. Keep in mind, if you were running a professional book, there's nothing to brag about when you're down 30%, especially when you launched on October 2025, right? But I will say the market went down only since then. So it wasn't exactly an easy market, and especially because the Levelytics strategy is long only. So, all things considered, if that's the end of it, God bless. And then this is the final chart, right? So the red line shows the beta adjusted exposure. And the blue line shows the percentage of the portfolio that's sitting in cash. And you can see here, I'm hovering over it, zero. $0, 0% of the portfolio is in cash. And I know usually people tell you, hold on to some cash just in case something goes wrong. I think in this situation, I'm just personally convinced, and I'm willing to take the risk with the book, that there is violence on the horizon, that I wanted to be deployed. And keep in mind, it's not like I deployed into the most high risk assets ever, right? Most of that extra cash just went into BTC. So if price goes down, it'll be fine. It's not going to be something that just ruins the book and puts the Levelytics book in an irrecuperable state. So on the other hand, right, like I said, that I deployed into mostly BTC, and that shows in the beta adjusted exposure for the portfolio. So the beta adjusted portfolio exposure is 117% long. What does that mean? It means I'm the equivalent to 100% long BTC. So if BTC goes up $100, I'll make $117 is what the theory is, right? So this is nothing too crazy. Considering most of crypto, most of altcoins are probably too beta to BTC at least. This is like not completely insane. And I feel comfortable with this, and I've given you guys the reasons over the past 4 to 6 weeks why exactly I feel comfortable, what the game plan was, and this is exactly what I'm doing. I'm sticking to the plan. And that's the nice part about having a strategy. And I'm not sure if I've talked to you guys about this. This is what's nice about having a semi-automated strategy at a minimum, right? Where it removes future decision making away from you, right? Because if you constantly have to make decisions on how you're going to run your book and manage your money, it gets very, very exhausting. You run in circles, there's no plan. And I think like anything else in life, if you don't have a plan, life can get very exhausting. You need structure. You need to implement that structure into the way you're trading these markets. So yeah, I've been sticking to the plan. Everything is going as I wanted it to go leading up to this event. I think it just depends whether or not the market breaks out. Maybe my analysis is wrong. Maybe the market needs a little bit more time to charge up. My opinion, and I stated this at the end of the article in the conclusion, I think the market's ready to go. I think it's go time. I think we get a gnarly move in the next 1 to 2 weeks, and we'll see what happens. Otherwise, I think that's it for today, guys. I really appreciate you guys tuning in. If you like the videos, you like the articles, like, subscribe, share with your friends and family, share to your colleagues. And I really appreciate the views, the positive feedback, the negative feedback, anything in between. Thank you so much, guys. Have a great day, great afternoon, great evening. Good night.